know that many of you will be worried about your pension value, and 2022 has certainly been a bumpy year for investors. The pandemic, the Ukraine war, and the rising cost of living have affected us all. Since the Chancellor's mini-budget, we've seen a lot of action and reaction from financial markets and the Bank of England, and a lot of talk about what's happening and its effect on pension funds. This can be confusing. I'd like to reassure you that we are following events closely. At Scottish Widows, we have many years of experience when it comes to market changes, so let me explain a bit about what's happening, why pensions are affected, and what we're doing in response. The headline news has been the falling value of the pound. It's falling because investors are worried about how the tax cuts the Chancellor announced will be paid for and what that will mean for economic growth. One way they could affect growth is by pushing up inflation and interest rates. If people feel better off because of the tax cuts, they might spend more. That would put up prices, and higher prices is essentially what inflation is. But because inflation, or rising prices, is already very high, the Bank of England, whose job it is to control inflation, has been putting interest rates up. The idea behind doing that is that it means the cost of loans and mortgages goes up too, so people feel less well off and don't spend as much. That hopefully reduces prices. If people start to spend more because of the tax cuts and prices start to go up, the Bank of England might need to increase interest rates by more than they would have done, and that could slow down economic growth. Tax is also how the government earns money, so if it cuts taxes, it has to find that money from somewhere else, usually by cutting spending, which isn't popular, or by borrowing. One way it borrows money is by selling bonds, sometimes known as gilts. Many pension funds invest in these because they are thought of as a stable investment. Uncertainty about how the government will pay for its tax cuts led to worries about the value of bonds, which started to fall. To protect and reassure investors, the Bank of England stepped in with £65 billion to buy government bonds. This has reduced uncertainty in both bond markets and stock markets steadied. The fact that the bank is happy to step in is good news for smoothing out some of the bumps we're seeing. While we're keeping a close eye on events, it's important not to panic. Remember that your pension is a long-term investment. Along that long term, there will always be short-term blips, sudden changes, or what we call volatility, which causes markets to fall. But our experience shows that it usually recovers in the long run. You can see this in the graph on the screen. I understand your concerns, but please be reassured that we are committed to supporting you through times that are good and those that are more difficult, and to help your money work as hard as possible for your future.